What is going on, everybody? Welcome back. It is 2024 and we are off to a hot start. Literally when I mean hot start, we can go on ahead, take a look at SPY, and we are down already here in the year. But what is this video about? This video is going to be about the YieldMax funds, TSLY, CONY, AMZY, APLY, and they have a bunch of others. So with that being said, I want to jump right into this video and get right to it. Cue that intro.
I know I'm fine, but the money
Okay, guys, it has been absolutely crazy. The amount of support that I got on the last video for TSLY, I'm thankful for all of you guys. And I want to explain a lot of things because it seems like not a lot of people, watch the whole video. And I get it. Maybe you ain't got the time, whatever the case may be. So thank you to those that have supported me. But for those of you that are saying that TSLY is the best investment you can make for income, can we please stop lying to ourselves? And I mean that in the nicest way possible. Again, I am saying this from me. I am not invested into this. But I hope this works out for everybody that is invested into it. And I wanted to get that in in the first about minute and a half of this video. So I just want everybody to know I hope you make money if you have money into these things. Now we're going to get into the real part of what's going on. Guys, they are, like I said in the last video, these funds are, look at the difference. That is one key thing I tell everybody to look at when I'm working with them, whether I'm mentoring them or any other sort of thing, is look at the overall stock chart, guys. If you pull up a chart on your laptop and somebody just sees a downtrend instantly, does that make anybody want to buy it? I just got to ask that question. Leave a comment below. Does this chart right here that we are looking at make you want to go buy it? Because it does not to me. I'm going to be 100% honest with you. It looks god-awful. So, but we're going to get into this. So if you guys, I'm going to link this down below in the description. This is the YieldMax website, guys. You can go in. They have a ton of videos. They explain how it all works and everything. And again, like I said in the last video, I do like the guy. I think the guy's smart on who is running it all and that created these funds. I don't think that it's a bad idea in a great market. He mentions you are limiting your upside risk by basically your upside potential is limited because you are doing synthetic covered calls. And if none of you guys saw that last video, I want to make this very, very clear to anybody that is watching this. If you don't know what a synthetic call is, we're going to go to Robinhood and we're going to make this super simple for you. So everybody loves Tesla, so that's what we're going to go with. Me, I think I would really go buy Apple. I actually have owned shares, full disclosure, of Apple, but I do not anymore. I just wanted to buy a share, and I held it until I got my dividend, and I exited it just so I could say I owned it. And I absolutely hate that I can say that I owned it now. But Tesla options, first thing you're going to go to. And they do this decently on how they're going to do a synthetic option, but I don't think a synthetic option is the best way for growth long term and income, personally. So if I was going to do this, you're doing calendar spreads basically just in both directions, it feels like, except for you're eliminating some of the options. So again, we're just going to go out here and I'm just going to show you some of the differences. So we're going to go 40 days. And we're on a call because you have to own a call in order to do a synthetic covered call. So we're going to go to we're going to go 235. We want to say we're in the money. In the money. Everybody loves that. We're in the money. And then we're going to go to a put and we're going to buy this. And again, 235. So where are we at here? We have 235 call and we have a 235 put, the exact same expiration date, basically at the money. We're just right there at it. The stock price is 237.40. We split the difference, one to be in the money on the call. You see what we're doing here. And again, we're expecting the stock to go up is what you're wanting on this synthetic call, but not too far and not too fast. Do you guys see how condensed that has to be in order for this strategy to work? I just want everybody to understand that. It is a very condensed strategy that has to go very specific in order to make money. And that's why I would rather see you guys go do cash secure puts on your own, or covered calls on your own on stocks that you already own, so on and so forth. But we're not done with this trade. We're not done with this trade. So, you guys see this here. What you're going to go do now is you are going to go back, and they are doing weeklies, I believe. So I'm going to go 5 days out here on Tesla, and they go 3 to 5% out if I was reading it correctly off of their fund page. But I'm going to go to a call. So 240, we're going to sell out of the money, of course, and we're going to sell. Oh, see, I just reset like everything here on this. And we're going to go up here, and I'm going to say they're probably going with these up here. You can get a little bit ways out here, but not too far with Tesla being a weekly. So let's just say they're going here, which is a 10 delta. You're going to collect 60 cents. Yeah, your total cost is going to be $29.55 for the first time. You have to pay to get into this trade, guys. That's what a lot of people don't understand. You got to pay to get into this trade, and then hopefully it cash flows enough to be able to get out of it over time. And that's only going out 45 days is what it was. That's not even going out. If you went out like 6 months, this trade would cost more to get into. A lot has to go right in order for this to work. Now again, I don't want to just point out Tesla. I do not want to be the one person that is like, it's only this stock. It's only this stock. No. We are going to go through them all. Not even all of them. Coney. Guys. This would have looked great. Except for it's less than a year old. Which again, it's not got a dividend track record of a whole year. I don't like that as a dividend investor whatsoever, or an income investor. I need to show some proof. I need some viability. I get it, y'all like startups. There's big money to be made in them. Sometimes those older companies that are doing really well are there for a reason. But we're going to go to AMZY, which is really new. Yeah, it's, again, I don't love these stock charts. I want something that appreciates, and I'm not going to have to pay taxes on because I'm not going to sell it. APLY. This is nasty, and this is the one I bought. But this one is just nasty, guys. I mean, who wants to buy this? When it's just, you're basically just buying something and praying to whatever God you pray to, this works out long term. And especially to those kids that I've seen out there, and some very adult people and very educated people, it seems like, are leveraged in this stock. I am praying for you that this goes very well for you. Again, let's go to their dividends. 56 cents, 46 cents, 17 cents. Is that right? Yeah, that's not good. That month was not good if you were an Apple owner. 47 cents. So they've, and then 22 cents. They're jumping around, and he does describe in his videos the intrinsic versus the intrinsic values and stuff like that. So he does explain what you're getting paid off of it, and I get that understanding of it. But again, let's go. I want to look at the dividends. 36 cents. 46 cents, 54 cents. I don't know if you guys see this, but there's a trend here. 63 cents, 47, 54, 46, 36. APLY is just getting lower and lower and lower. And again, this is coin. So this is the stock coin that they're doing this on, which is more volatile. So they're probably going to get more premium off these. $2.46. Now that's a great one, and that's why the price shot up. About guarantee it. $2.69. That's a great. You would have done great on these, but not when the stock goes from 30 to 23 in 3 to 4 days, guys. Those are high volatility. You're just not going to sleep at night, guys. When I say I want passive income, I don't want passive income. I got to worry about the company going bankrupt, or I got to worry about other things on these companies that I'm just staying up all night. No. Coca-Cola. I buy Coca-Cola. I know Coca-Cola's in every convenience store around here. They're in every movie theater. They're everywhere. Guys, they're making money hand over fist, and I know there's a dividend coming to me. It's not even a high dividend, but I can run covered calls on it. I can sell puts when I get assigned afterwards, and I can buy it back down at a cheaper price. Guys, these are all options that you can do other than these funds that don't look good, and they look like they are a quick cash grab. That's going to be the death of them. Again, TSLY seems to be the absolute most popular. And it is by far the absolute just awful chart other than Aply. I mean, these two are... Who buys these? Who wants to buy a company that is just going straight down? Unless you think you are just cherry picking for value right here at the absolute bottom, and you're hoping this thing bounces back and runs the 20 or even 15 in this case, and you can grab some percentage off of it, cash out, maybe you get a dividend in that run, and run away. I don't see it. I hope I'm wrong. I just truly hope I'm genuinely wrong on this one. I don't see it happening whatsoever. And again, they have a ton of these. This is, the max overall on these. Guys, they just started with, there was a Q's one that I was looking at. And they have a JP Morgan, guys. I'm not against JP Morgan stock, but I would rather do it on its own. I'd rather go buy JP Morgan's JEPI stock before buying JPML. I actually got to look this up while I'm recording this because I have not seen this. This is going to be a thriller for all of us. Oh, this one's really new. Okay, that's why I haven't heard about it yet. So, a couple months into last year, they started this one. You guys notice that they're all around $20? I got nothing against that. It's a great price point for a stock. If Apple came down to $20, guys, man, I'd be buying it up. Google came down to $20 to $50, man, I'd be buying it all up. I get it. But they're starting here, and they're just coming down. And then they get a little bit of a spike with some income, and then they go back down. Yeah, look, they 51 cents and then instantly cut that dividend in half, over half, and then working their way back up slowly. In this past week, probably helped maybe a little bit for the income, but what happens when they have to write cheaper covered calls on those because their strikes are no longer in the money and they can't write those ones that are even bigger and collect those premiums? Because I don't see if I've been trading options for 9 years now, I think. I've been trading in general for 10 years. I don't understand how you are a viable business at this point in time. You're floating money and leveraging money is what it looks like for something that looks awful. And if I gave my kid an inheritance money and he said, I'm going to buy TSLY, I would tell him good luck, but don't ever ask for another dime of my money. So thank you guys all for watching this video. I know it's kind of more of a rant on this one. I hope this helps somebody else out. Don't get trapped. Make smart investments. Make smart trades. And I hope to see you guys in the next video.